is pretty much in line with whatever Bank of England is essentially doing. And that's exactly what they need, because, you know, you don't want to have the government doing one thing and then the Bank of England doing another thing.
I think Hunt was more conservative, right?
Yeah. It's also understanding where you are in the economy. Like, of course, right now, you know, there's a lot of other impacts. When it comes to the economy, you got, you know, the rising energy cost, and then, of course, like the UK stepping up along with the US to provide, you know, temporary energy and gas and oil supply and all of that to the EU while they can. And then you still got, like, you know, what's happening with Ireland. So with the new prime minister, of course, you need, you know, a positive stance. What I mean by that is someone who can continue a positive relationship with the EU when it comes to specifically Northern Ireland, right? Where Boris Johnson was a lot more like, you know, hardcore. And if something didn't fly with him, then, you know, he kind of stood his ground. But obviously the EU didn't like that for certain parts. And so, you know, things like that, where you need someone to come in who's going to be a lot more, I don't know if it's the right word, but like diplomatic, right? Where this person's going to like understand like foreign relationships and whatnot, and kind of work on that and build those, because that's what you need in a global recession. As a single country or a single nation, you're not obviously going to just overcome recession, you know, by yourself. You need to be able to work with other people, really take advantage of comparative advantage, and then that's how you move into economic growth. You don't do that with just absolute advantage, if that makes sense.
Listen, we're all about making America great again. Screw that advantage crap.
All right. So we got a few people coming in. So let's go ahead and get started. As always, I'm going to ask you guys to annotate. We're going to start off with the weekly time frame. I looked at the poll that I put up on YouTube, and it seems like majority of the people want US 30. We got one comment from Chris to do PMI or PCE, and I think it'll be fun to do PCE. So I took it back, though, like, you know, a couple of years back into like 2015, looking at, you know, PCE data. So based off the weekly time frame, very first thing that I'm going to ask you guys is, can you mark off the current resistance and support areas on the weekly time frame, please? So feel free to annotate. Alright, you got the current resistance right here. So before we drop all the way down there, whoever made the box down here, before we drop all the way down there, what level needs to be broken? This one right here, right? You gotta break the own weekly low in order for you to continue all the way down here. So that would be the next step. But yes, this is a key area, of course, that price is tapping into. And then it grabs that liquidity and push back up. But in order for us to continue down, there are a couple of other levels. So one hack that I talked about this morning was, when you guys are looking at the weekly time frame and the monthly time frame, pay attention to the current weekly high and the monthly high, and then also the weekly high and weekly low, right? Pay attention to that and mark off, you know, a monthly high right here, monthly low right here, and then weekly high and then weekly low. And if that level is broken, if that resistance and that support here is broken, then you move on to the next level, right? But as of right now, like this week specifically, if price can't break past, let's say, you know, this top wick rejection here, then we know that we don't have any buy opportunities, right? Or if price can't break below this bottom wick here, then we know that we don't have any sell opportunities. So this is our range at the moment. Make sense?
Yes.
Perfect. Let's go ahead and drop down to the daily time frame. Did I not? There you go. Okay. So now coming on to the daily time frame, what do we see happening here? What's going on? So let's start off with some of the most obvious price action first. What happened at this level and this level and this level? The word starts with an L.
liquidity
Yep. And how do you know?
because of the bottom wicks and rejection. And going back to this, like the same level. Let me go.
So you have the bottom wick rejections, but what happens after a candle starts forming here? What gives it away?
It went to it changed direction. Like then after grabbing liquidity, there was a lot of big movement after that.
Yeah, big movement, volume. So, when you're looking at specific levels, trying to figure out, is this a liquidity area? Was this a liquidity grab or not? So look at, the movement, but look, essentially that just means volume, right? So liquidity and volume, those kind of go together, and you'll always see volume once price taps into a liquidity area or it grabs liquidity. So we got that down, right? Perfect. So we saw some form of consolidation here. Price finally pushed up. We're still in this bullish momentum. Where is this bullish momentum really broken? Anyone? You guys know it. Just be confident. Just say it.
It was broken when the daily broke the high here, and then there was a retest with the second one, and then we can see like it's rejected this area. It looked like a break and retest.
Yeah, but now you're still in a bullish structure, right? So Ian marked off this area. That's exactly where your bullish structure is really broken, because if price pushes back down below this area, then you're coming right back into this consolidation, right? But if price continues pushing above this area and you get a retest and then a continuation back up, that's how you look for those buy opportunities. So really what you want to look at is, how does the structure change, right? And there's like 3 different really structures if you break it down, where you have a bullish structure, you have a bear structure, and then you have times in the market where it's just consolidating, right? So that's just consolidation. It's a ranging market. So those are essentially the 3. What you want to take a look at is, when you're looking at structures and when you're trying to map out key areas, is if price continues pushing above this, clearly you want to see like those lower highs and higher highs being formed, higher highs and higher lows being formed. Or is price pushing back down and then you want to see lower highs and lower lows being formed, right? So those are pretty much the 2 that you really want to trade, because it has great volume, right? It has great movement, and you can take trades on the impulsive moves and even on the retracements. But if you're in consolidation, that's when you want to be a little bit more careful. Clearly this is a huge range, right, of consolidation that you could trade if you are able to get that clean price action, because this is a daily time frame. But when I'm looking at this specific area, then this is where I want to be extremely careful, because we've already tapped into this resistance, made a top wick. Now if price continues pushing down, that's where you drop down to lower time frames on the 4-hour, on the 1-hour time frames, and you start to look for previous candle lows to be broken, right? So you want to think about those 3, where is it a bullish or bearish, which is really when you get majority of the volume, that's what you want to be trading, or is it in consolidation, and that's where you want to be extremely careful. So in this case, think about, where is price going to essentially pull back, right? So you still have that bullish structure, but if price pulls back below this area right here, then you have all this consolidation. So either price can pull all the way back down into this zone, which price has done, right, in the past, even breaking these previous highs. It did pull back down into the zone, grab liquidity, and then continued pushing back up, right? So that could be one thing, or it just continues in the opposite direction and the price continues breaking these lows and then coming right back down. So that's another thing, right? If price is to retrace. If not, then can price break above this level, give you some form of a retest, and then continuation back up. Make sense?
Yes.
Okay. So those are a couple of things that you want to keep in the back of your mind before you even hop into a trade. So when you're doing your analysis, whether you're doing it in Asian session, New York session, or London session, before you even hop into a trade, you want to think about, what are the different potential moves that price can do, and where's those confirmations of those moves. So in this case, if price were to come back into consolidation, we have that confirmation once price breaks below this 18,054 mark right here, right? And then if we want to look for any buy opportunities, then we wait for this 18,231 point and then continuation back up. Is there anything else that you guys would mark off on the daily time frame here? Nope.
Could be there?
Yeah, we could mark off that area. I would mark that off as a zone.
Okay.
Right into this. And why is that?
Because that's the area like in the break and retest happen, like it's just breaking the high and breaking the previous high too. So like we expect it's like some consolidation right here if it's gonna continue up, right?
Yep.
Or the next daily to do practically the same.
There you go.
Like doing this. Week rejection and continue up.
Perfect.
I don't know what's the next target. I didn't see the next target if it's continue up, but it could do that.
Yeah, that's perfect. Good job. Really good job.
Thank you.
All right, let's go ahead and drop down to the 4 hour now. So there you go. When you drop down to the 4 hour time frame, you start to see that this was all a consolidation resistance, and then finally price broke above this. So that was your break and retest that happened on the daily time frame. Now as price is pushing up and we've rejected into this area, a couple of things that you want to see here. 2 ways that the market could continue moving and you can take advantage of this is if price rejects off of this and then comes back to retrace into these areas, because this was a key level, right? Off the daily and the weekly time frames, we're sitting at some of the high levels here. And so now what we want to see is retracement and then a continuation back up, or you wait for price to push above this and then give you some consolidation and then continue pushing back up. Basically the point is that when you hop up to the weekly time frame here, you're sitting at these oversold conditions, right? Where price broke out of this consolidation, but we didn't get like the massive movements that you would get otherwise. Where it would tell you that, okay, I'm clearly ready to just continue pushing up bullish. Yes, we have these bottom wick rejections and we're closing at the high of our range, but you need the market to respect the broken consolidation as a new support and then continue pushing up. So this setup right here already tells you that when you drop down to like the daily time frame, to the 4 hour time frame, that there's been so much volume already into the market that the market has to collect orders before it can continue pushing. And what are the 2 ways that the market collects orders?
Retracement and consolidation.
And there you go. So we need that to happen in order for us to look for any continued buy opportunity. So you're already getting these signs that there is great bullish volume based off the weekly time frame. You go onto the daily time frame and you start to see a little bit of consolidation here. A nice bottom wick rejection, essentially the same setup that happened here, right? With that liquidity grab, and then the following candle just continues pushing. That's what we got, a nice break and retest, barely a bottom wick on the previous daily candle, and the price pushes up. Now what we need to see is some bottom wick candles or bottom wicks on this new candle, and then a continued push up from there. And that's your buy opportunity. You need the market to push back down, to push the price a little bit lower, to make a bottom wick, and then continue pushing back up. What's the bottom wick on a bullish candle call? Is it a liquidity wick or is it a range wick?
Liquidity?
Yes. Perfect. So now you got that on the 4 hour. Let's come on to the 1 hour time frame. Now what's happening here? What are you guys seeing some indications of when you come on to the 1 hour time frame and you're seeing how these candles are forming?
Less volume in each candle.
Yep. And what does that tell you?
That we're losing momentum and possibly pull back.
Perfect. So possibly a pullback or even just a consolidation prior to a continuation back up. But when you start seeing that these candles start to lose volume, that's when you want to be extra careful into the markets. You don't want to be looking for impulsive moves or anything like that. What are indications that there's losing volume here? Wick rejections, body formations. What's your indication here? How do you know?
The bodies.
The bodies, and then massive top wick and bottom wick rejections, but price isn't really just breaking previous highs or lows, right? Where it just comes back and it closes back into like a general area. So in this case, if I were to actually map that out for you guys, this is your general area. After this movement here, we already lost the volume. And then in this general area, you're just seeing the candles closing. You had a doji close right here after rejecting and creating a high, and then the next hourly candle comes back and closes bearish, rejects and breaks the previous low but comes back and closes into this specific area. So what I want to see is, can we see price pushing back down into these areas prior to a continuation back up, or is it going to be a consolidation and then finally we break above these levels and we look for those continued buys? Everyone see that?
Yep.
Yes.
So now, what are some levels that you would mark off here on the weekly time frame? Or on the hourly time frame, sorry. How would you essentially narrow in to be like, this is my no trade range? Okay, so we got that right here. What else? Or would you just call this the entire no trade range?
Yeah, for now that could be.
All right. So this entire area here would be a no trade range. We start to see some consolidation. Our only buys would be valid if price can continue breaking above. Let's zoom out. Can continue breaking above this. Any sells would be below this level and then a push back down, and understanding that we're still in a higher time frame bullish structure. So this is just a retracement trade. So we need to know that the limitation of our trade could very well just be right into this zone, which was the daily break and retest. Perfecto. So now let's go ahead and drop down to the 30-minute time frame. So on the 30-minute, you start to see a nice bullish volume here, and then you start to see a retracement, a consolidation. This was your liquidity grab, massive bottom wick rejection, which gave us enough volume to continue breaking the highs and creating new highs. And now finally we've exhausted out up top here, and now we're starting to see some pullbacks. If the hourly is giving you consolidation, 30 minutes giving you consolidation, 15 minutes going to be no different. So let's go ahead and play this. And let's do that. So this is Asian session on Wednesday. Let's trade leading up to PCE. So this is PCE is going to be coming out. I believe this is the following week.
You leave that whole area as no trade zone or that one could be another. Sorry, my lines are cuckoo.
If you want to take a scalp, then you could trade after price breaks below this. Coming back down, but you would be taking some partials. This would the limitation of your trade would be, because this is consolidation on the hourly. If you're looking for, let's say, a swing trade, then you would have much cleaner sells if price breaks below this, or buys above this.
Got it.
Hey VJ, are you just playing through, or with that economic news thing, can you skip to a day?
Yeah, I can skip through. Everyone okay with me skipping through? Just making sure.
Oh, I mean, I was just asking.
Oh yeah, I could skip through, but there's like, PMI data and all that that's supposed to come out too. So.
And so, like, because I'm still trying to learn how to use it.
Yeah.
So if you skip, are you clicking on the news? Is that what makes you skip?
No, so when you're trying to skip through, let's say it says the 26th here, at like 16:30, which is just U.S. session. So you would come onto like the daily time frame and just do like next bar until you're on the 26th around this time.
I thought you could like click on the news and go to that.
I don't think so. Yeah, no. We could skip to that. Do you guys want to do the CPI? Which is tomorrow.
Sometimes it's good to check what it's doing like in the previous hours.
Okay, we can do that.
To kind of have an idea, no, what is going on.
Yeah. Absolutely. So clearly this is going to be a week of ton of fundamentals are coming out. So let's see what else there is. We got inflation expectations. I think this is a Friday here then, yeah. Alright, you guys okay with me skipping to at least the New York though?
Yep.
Alright. Alright, here we are, pre-New York. Let me remove all of this just so we can take a look at the levels again. So we had our break and retest. Or actually that was the daily break and retest, but we had our resistance that was being formed here. And then price broke below it, and all it's doing is now just consolidating, right? Hop up to the 30-minute, same thing, a ton of consolidation. But notice also how this is a key level that we're currently in, right? The weekly overbought conditions. This is quite similar to where we're sitting at right now when you're looking at US 30 in the current price action, where we're sitting in actually oversold conditions. But within that oversold condition at the low, what we're starting to see is consolidation forming there as well. That essentially what happens in consolidation. What's going on?
Collecting orders.
Collecting orders, yeah, generating liquidity. So that's essentially what the market is doing going into next week, where you have a ton of PMI data coming out, and then you have PCE coming out, and then you also have advanced GDP coming out, and then the week after that is when you have interest rates coming out from the Fed. So you're sitting at similarly, basically what the point here is that when you're sitting in either overly bought conditions, which essentially means like those all-time highs, or you're sitting in overly sold conditions, which means that you're coming back and tapping into weekly support areas or monthly support areas, you're going to see something similar when the market is getting ready for massive economic data that's about to come out, like high impact data that's about to come out. So in this case, we're coming up to these daily time frames where we had already seen the rejections, and this is the type of confirmation I'm talking about, just from like price action perspective, where you have that massive movement, and then after that you start to see, yes, there's bullish momentum, but now we're tapping into those previous highs, or like all-time highs, and now you need price to come back to these previous highs and correct some of these movements prior to continuing back up. Then you come onto the daily time frame and you start to see how price slows down here a little bit, consolidates, pushes up, you get a break and retest, which gives you enough volume to come up here. This is a new daily candle, so obviously if we can break these lows, then we can look for these sells to at least come back into the zone, right? Come onto the 4-hour time frame and you start to see consolidation here. So you guys see how like you can already see these kind of things from higher time frames?
Yes.
Yes.
So that's why we want to be paying attention to what's happening on the weekly, what's happening on the monthly, what's happening on the daily, because it can already tell you like what to expect when you drop down to lower time frames.
What is this one? Is this London or pre-New York?
This one is in pre-New York, yeah. I can speed this up a little bit more if you guys like.
It looks so small for pre-New York. For a 4-hour candle? Oh.
Yeah. There you go. So even on the hourly time frame, just straight consolidation. 4 hours also consolidating. 30 minutes, of course, is going to be messy. So now this, for me, confirms the fact that this entire range here would be a no trade range for me. I would want to look for any sells below this level that we had marked off, or any buys above this level. Alright, you guys okay with me skipping on the 15-minute time frame?
Yep.
Yep.
Yeah.
All right, perfect. Let's go at least 15 minutes into New York. So we're 15 minutes into New York. Come over here. All consolidation. We're still sitting in consolidation. So let's see if we can get enough volume from Fed Chair Yellen testifying, and then also mortgage delinquencies, which is very important because when you start seeing these numbers increasing, that's when you're really in economic trouble. Alright, let's skip through because we have about 2 hours until that news comes out. So I'm just going to skip through just to see if we can break out of this consolidation, but this would be pretty much that indication that you don't want to be trading in this area. So now in the next 15 minutes or so, if this candle can close below this, and then we can get like some sort of a confirmation that price is respecting this area as resistance, then we can look for those sells with price pushing back down. If price just holds on to this as support and comes back into consolidation, that's your no trade day. Alright, price is pushing, made a nice top wick, flipping. Let's see if we can close below these areas. Alright, price push right back up. The hourly closed right at the level, and then the new hourly is already making top wicks. We come right back into consolidation. This is your no trade range. So at this point, we would not be looking for a trade in this area yet.
It's just another liquidity grab.
Yeah. So look at that massive consolidation. And now this candle's breaking the highs and lows, so you would not be looking for an entry on this candle. Alright, price finally breaks above. We close above. Can we continue bullish from here though? So now London is also closed. You're coming into the last couple of hours of New York. So even if you're trading around this area, which I personally would not be trading around this time, but if you were trading around this time, then you want to be extra careful with your confirmations. And then tomorrow is CPI. Alright, so notice how you're going to see similar price actions, just different time frames. So same thing here as well, where price held onto a support, broke the previous highs, and then you start to see that volume, slowing down a little bit. There you go. So this candle failed to break the previous high. The next one, we saw it fluctuate and then pulls right back down into this consolidation area. Right, we've seen something similar here too, where price pushed up, and then after that the following couple of candles failed to continue breaking the highs. Once we did, we create that top wick, reject it, and then pull right back down. Alright, you guys want to skip to the next New York session?
Yeah.
Sure.
Alright. Come right back into consolidation. Here is London, and here you are back into New York. And now in 30 minutes, you're about to get CPI coming out and core CPI coming out. So price is clearly now breaking below these areas. That's exactly what we need. But can we get that continued volume? So let me move all of this up top here. So can we get that continued volume where this candle will close below this area, and then we can see like some sort of a retest or something, and then a continuation down. Without that, I'm not looking for a trade opportunity. So now I definitely, as price is breaking out of consolidation, I definitely want to be waiting for a retest. So since it is high impact news, we can easily just get a top wick rejection and then a continuation down, as long as we can close with a strong bearish candle down here. But ideally, before price breaks below this and before news comes out, I would want to see some sort of a break and retest set up, I would say, below this entire area right here. So even from a price action perspective, as high impact news is coming out and market, it has been a consolidation for like, a couple of days, you'll always see the market setting up for that news that's about to come out. So in this case, let's say if price wants to continue pushing down, you could potentially see some break and retest right before it breaks out of that consolidation, right, on lower time frames, and then on higher time frames it could just look like a massive seller's pressure. Or in this case where price just made a massive bottom wick, if this candle, as you can notice, it hadn't really broken the highs and the lows, it was just kind of fluctuating in its range. But as we're getting closer to the actual news release, that's where we're starting to see some more volume, but a lot more fluctuations as well. So I'm going to slow this down here a little bit just so we can see the impact of the actual news coming out. And I'll move this here. So up until this range, the market will have already priced in. We need data coming out of that range here. So let's go up, and here we are. So there you go. So pretty close to what the forecast was, and we actually ended up decreasing, which is exactly what you need in the current markets. So this is back in like 2015, right? So obviously around that time, we had a pretty good economy. We had a strong economy. So inflation wasn't an issue, right? So obviously in this sense, you would start to see the market reacting to it in a more positive way. And then when you start to see that you're sitting in those all-time high levels on the weekly time frame, on the monthly time frame, and things like that, and you're sitting in a growth economy, you'll start to see that when data is coming out, specific data is coming out, the market is going to react differently to it. And that's why it's so important to understand where are you sitting in that economic cycle, and then how is that data reflecting the health of the economy. So right now, for example, if in 2022 CPI data came out and we start to see consecutive negative CPI data coming out, that's a good thing. That would mean that as the Fed or as any other central bank continues to increase interest rates, now inflation is starting to decrease. That's exactly what you need. You would see so much optimism into the markets if that were to happen, right? But as CPI continues to increase, then you're going to start to see a lot more, market fear settling in because of where we are in the economic cycle, right? Where there's super high inflation already. In this case, we're sitting in a growth economy, inflation is a good thing. You would want to see inflation, right? You want to target like at that 2% inflation. You want prices to steadily increase to a point where no longer, like, consumers are no longer interested in buying that particular good product or service, right? So inflation is a good thing depending on where you are in the economic cycle. If you're sitting in economic growth, that's a great thing. If you're sitting in like a recession, you don't want inflation. Any questions about that?
No, it makes sense.
All right. So now we're still sitting in consolidation, so we're going to wait it out. We're going to see, until price breaks out of this area. What else do we have coming out this week? You got prelim GDP coming out. So next week we're going to have an advanced GDP. So prelim GDP and advanced GDP also tends to have a lot of impact compared to like final GDP, not so much. Because prelim and advanced come out, before final. So they already tell you, what sort of to expect essentially. And then everything else is like going into next week. So this week, as you can see, quite similar to what's happening in the markets right now. You're just sitting in consolidation. So that's how you kind of figure out whether it's going to be a trade day or no trade day. You mark off these levels from higher time frames, and you don't take a trade until these levels are broken. So just for time, I'm going to go ahead and skip through. Alright, so you got that nice top wick. Price pushes back down, closes below this area. Perfect. So we got our first close. Now I want to see a retest and a continuation down. We have 2 hours before London closes. Let's see if we can get that retest and then a continuation down, and then we can look for potential sells. Without that confirmation, I'm not looking for a trade. So we still have all these levels, higher time frame levels, still being respected. Quite similar to what we have with US 30, right? Tapping into like, what are we sitting at? Like 30,000, 31,000, something like that right now. All right, we have pushed right back up into these areas. And you come right back into consolidation. That is why we wait for confirmation. Without confirmation, we do not look for an entry. I know a lot of people would have probably gotten caught up right here. So that's why we're going to wait until we get, close and then a retest, and then you look for an entry. Massive top wick. All price is doing at this point is just consolidating. So if there's a long consolidation, what does that tell you? What kind of volume can you expect once price does break out of consolidation?
A strong breakout.
Yeah, strong breakout, strong.
A catalyst.
What's that?
A catalyst.
A catalyst, yeah. You want to wait for some. You want to wait for some sort of a fundamental catalyst to finally help you break out of this. So really, CPI data that was coming out at that point, it wasn't that big of a deal. Right, back in 2015, because you were sitting in a healthy economy. All right, let's continue skipping through. So you're all in consolidation. Price once again comes back and taps into the same level. What I would do is just mark off that level and take a look at, what has price done here previously. Right, and then look for your potential entry. Even when price did break below that, let me actually clone that. We don't have any sort of a retest. So this type of entry, especially when London is already closed and you only have like 2 hours until New York closes, this would not make sense to take an entry here. So you definitely want to wait for a retest prior to any sort of an entry. So we're going to continue skipping through to see even if, can we even come down here? Nope. So candle just flipped, came right back into consolidation. So once again, another confirmation. Wait for your entry confirmations prior to looking for an entry here. But that all was, once again, a liquidity grab. All right, you got the last sessions of the week. Let's go ahead and skip to New York once again to see if we can get some volume. I'm going to delete that one down here. Just keep these levels that we currently have. So we're finally in New York once again. Do we have any news coming out? We got prelim GDP coming out today. Prelim GDP price index, Chicago PMI, pending home sales, revised consumer sentiment, revised inflation expectations. You got FOMC members speaking. It is a heavy day. So let's see if we can get enough movement for price to continue breaking out of these areas. We can also update these levels. That's what I would do, just coming onto the charts every day. I would have updated these levels here, but the higher time frame levels, as you can see, they still hold. Nothing has changed here. You got the daily that's now starting to consolidate, sitting at those all-time high levels. You start to see consolidation, you start to see liquidity, and then here, what's happening on the 4-hour time frame now? What is price doing right here?
It's creating a resistance in there.
Yep.
In this level.
What about the last couple of 4-hour candles? What are they telling you?
There's some sort of exhaustion.
Exhaustion happening. We're holding on to a resistance here. Now take a look at price action details now. Let me go ahead and move this to the other screen. So now breaking out of this, did we have good volume or did we have very low volume?
Good volume.
Good volume, right? Up until this point. And then here, price ended up consolidating, pushed back up, created a high, right? Even though it was a fake out. Came right back down, pretty much right back into this consolidation, pushed back up. Did we create a higher high or did we create a lower high?
That's a lower high there, on a lower low following.
Perfect, lower low following right here, right? Now price pushes back up right into this area. What happened?
Another lower high.
Another lower high, right? We don't break this new low that price has made. We're just respecting it, right? We haven't created higher lows here either. We're just respecting the same low. Now price is pushing back up into these areas and it's rejecting this level right now. So what is it forming right now?
Lower high. Consolidation.
Lower high.
A lower high.
Sorry. Consolidation.
Yeah, consolidation, and it's creating those lower highs in consolidation. That was your last high that price made of that bullish momentum. After that, price pushes back down and then comes right back up into this area, creates a lower high, pushes back down, ends up creating a new low, breaking out of that consolidation, even though this was a fake out, pushes back up, fails to continue breaking above this level, pulls right back down into the same thing, and then pulls back up, same thing, resistance, comes back down, respects the same support, it's not a higher support or anything like that, and then we're still pushing back up into these areas, right? That's still a corrective move. If price holds onto this area as resistance, there's a very high chance that we come right back down to revisit into this. Is it going to happen today? Possibly, with all the economic data that we do have coming out, or can we get ready for, next week if there's a lot more economic data coming out next week? This is essentially what has been happening in the market this entire week, besides today, because there was just so much volatility kicking in with, so much that has happened. But other than that, when you start looking at the clear price action, what is price telling you, even within consolidation, it'll tell you where is it headed. So right now, in this, the hourly time frame, even right now, price is failing to break these previous highs. Notice that? Even though there's barely a bottom wick. So if we started off with so much bullish momentum where you don't even have enough bearish momentum to create a bottom wick, we should have had enough bullish volume to continue breaking these highs if we were to continue pushing bullish here. But as of right now, all price is doing is just creating this little bearish trend now. So what we wait for is, once again, price to push down. You wait for some good volume, and then you look for some sort of confirmation. If there's high volume that's coming out around this time, just a top wick and a continuation back down, and you want to wait for price to continue breaking its own low. If it's not high volume time, let's say London has closed and you're in the last couple of hours of New York, you need to wait for a break and retest prior to an entry to come back down. But as of right now, you could start to see the bullish volume starting to die down, right? And you're starting to see a little bit of the bearish volume hasn't kicked in just yet. It's just that the bullish volume is dying down now. Does that make sense for everyone?
Yes.
Yes.
Perfect.
Yeah.
Right, let's take a look at news. In about a minute, you're about to have prelim GDP coming out. So I wouldn't be surprised if there was, a lot of volatility if we did end up missing the forecast, and if it came out, let's say, higher than the previous or lower than the forecast. So you need these numbers to be missed with more than 1 or 2 percentages. So there you go. You have prelim GDP coming out, pretty close to the forecast. And then you saw a nice top wick and price pushing right back down, but we haven't broken out of consolidation just yet. And you still have a lot of data that's coming out, a lot of, FOMC members who are speaking coming out. So you still have a good amount of economic data. Did that price action detail make sense for everyone?
Yeah, 100%.
Perfect.
Yes, it does.
Because I'm going to ask you guys to break that down for me when we do our simulation session this weekend. So make sure you guys are still practicing. Alright. We got another lower high being formed here. Nice bearish volume to come back down, but you still don't have enough bearish volume to continue breaking past these levels. Check the higher time frames. All right. Everyone cool with me skipping on the 15?
Yeah.
All right, perfect. All right, finally we get a close down here. Let's see if we can get some form of a retest. So we got a nice 15 bearish volume to push back down into these areas. How's it going, Trader X? Alright, there you go. So you got some nice volume. Daily's pushing out of this consolidation as well. That's exactly what you need. You need these higher time frames in your direction, so then you have clean sells, or if price was pushing up bullish and the higher time frames were in your favor for a buy opportunity, then price just pushing with that bullish volume. But the point being is you want some of these higher time frames in your favor before you start looking for an entry on the 15 or the 30. Alright, bottom wick rejection, flip back up. I'm pretty sure we've seen this multiple times in the last 40, 50 minutes ever since we started doing this. So this should already give us a good understanding of what to expect. If price pushes back up, there's no entry. Alright, we got a few minutes here. So instead of skipping, I'm just going to speed this up a little bit. At the very minimum, what I just want is price ending up and closing below this area. Even on the hourly or so, right? And then if we can get some sort of a retest. So we did end up closing, which is good, below this. Now, as long as we can hold on to these areas here as resistance, we're good to go. So continue creating those lower highs, essentially. But anything, coming right back like this high up, I would not be interested in any sort of an entry. So what I'm going to do is mark off. That's too wide, but I'm going to mark off this entire area here. Anything up until here, I'm comfortable with. That's fine. So here, you got that massive wick rejection, and then candle comes back down and closes bearish. What does that in itself tell us? Because we haven't seen that in the last couple of times when price did want to push back up into consolidation. So what did that 15-minute candle just tell you, essentially? What is this?
It's rejecting the buyers.
What's that?
I said I was rejecting the buyers, like it's rejecting this.
Rejecting the buyers, and then what kind of wick is this?
It's a liquidity grab.
That's a liquidity grab. So a top wick on a bearish candle is a liquidity wick, but a bottom wick on a bullish candle is a liquidity wick, right? So that's part of the candle anatomy right there. So right here, what we've had is the last couple of times, massive bottom wick rejections, and then candles close back up bullish, right? And that's when you start to see the volume back upside. Here, it's a weak bearish candle, but this is good confirmation telling you that we have rejected all the buyers and we tapped right into that consolidation, came back down and flipped back and closed bearish. Now what you need on the following candle is just another respect with a top wick and then a continuation back down. As that happens, we have an essential entry as soon as this low here is broken. But if this next candle takes you right back up into this area and comes right back into this consolidation and ends up closing into this consolidation, like price did this last couple of times here, then you don't have an entry at all this week. But if price rejects these areas and continues pushing down, well, we have already rejected that, right? But as long as price can tap into these areas, reject that, and continue pushing down without breaking the previous top wick, you have a potential entry. So there you go, as price is pushing. So let's say you looked for an entry around here, but before you do that, confirm with different time frames, right? So let's come up to the daily time frame. So we're starting to push down. We're breaking out of this daily consolidation. Notice how the last couple of daily candles, they came back and closed into the same range. They didn't really break previous highs or anything like that or continue the bullish momentum. You come onto the 4-hour time frame. You've got a nice top wick and then price is pushing back down. So we have so far the daily and the 4-hour in our direction, right? And then you come onto the hourly time frame. You also have the hourly in your direction. So what you could wait for is, I believe this 4 hours is going to close in like the next, around like 40 minutes or so. So if you want, you could wait for that candle close, right? And then look for an entry on the following candle, which would be perfectly fine, right? So after Chicago PMI comes out, and then when consumer sentiment is about to come out and when inflation expectations is about to come out, you could look for an entry there, right? Or you could look for an entry here, since we do have, across different time frames, we do have all of them pretty much in our direction. So would anyone want to take a trade here?
I would.
You want to?
Yes.
All right.
Same.
All right, so let's go in with 1% each. Where would your stop loss be and where would your TP be?
My stop loss could be here.
Okay, there we go. And then TP?
The TP, let's try here.
All right. What about you, Ian?
Stop loss looks so wide, at least for me. Did this 15 candle close already?
No, not yet.
I'll wait for this one to close.
Okay. All right, this one actually just started forming like about 2 to 3 minutes ago. That's still okay?
Because my thinking is, I would, based on the other previous wick rejections, even though candles are in our favor, I would probably just take it to here if I like what this did.
Yeah.
But that's just me. So
no, I agree with that. Like, for me personally too, like what I like to do when I'm placing like my stop loss, I want to place them above like some candle closures or like a smaller of a top wick. In this case, yes, like, you know, obviously we have the different time frames in our favor, but yes, for me the stop loss would be kind of wide too, given like all these wick rejections. But the thing is that this is just further confirmation. So I would, same thing, I would kind of wait, see if I can get like a tighter stop loss entry instead.
Yeah, it's that price, whatever area price hits on those two big liquidity wicks, like in the past couple days, is my main thing. But yeah, okay.
Like I would, for example, a potential entry would be like if this candle like flipped back down and closed bearish, and the next one gave me a top wick and continued pushing down, I could easily place the stop loss somewhere up top here.
Yeah, like the way candles are printing now, like where Yanet's stop loss was, that looked better.
Yanet, that stop loss took you out right there, but it was like just a 0.84 percentage.
I was thinking like I should put it right here.
Yeah.
But I was like too late.
No, that's okay.
It happened to me many times. So anyway.
It'll be, we'll give you a second attempt, right, when we see a potential setup.
Stop me out anyway. If I
No, if there's a setup that like I would usually take, you know, I'll let you manage that one. But in this one, yeah, for me, like the stop loss would have been wide as well. But I want to see candle closures, right? And I want to place my stop loss based off the candle closures. Let's speed this up a little bit. And about 19 minutes, we have another news coming up. So this 30-minute is going to close here shortly. All right, we're back into that area. Yeah.
I guess this is the volatility prior to news.
Yes. Usually you see like a lot of volume when it comes out to like inflation expectation and consumer sentiment in general. Like we've seen that way too many times.
Yeah, 100%.
So price pushes back up, gives you a top wick, pushes right back down. Well, let's see if it can close below here. Once again, I'm not looking for an entry if this thing just pushes down. I want to see candle closures here and then look for potential entries.
BJ, I have a question.
Yes.
It's about US 30.
Okay.
US 30 is the 30 companies for NYSE.
New York Stock Exchange?
Yes.
Mm-hmm.
And do the earning dates make any change on how this pair is behaving?
Yeah.
Other than the news?
Yeah. Earnings affect overall the stock market, right? And this is like top 30 companies.
Yes.
In the stock market. So yes, earnings will have an impact. It's not going to have a major impact, right? Because a lot of it depends, like unless you completely miss the earnings. Another thing with stocks in general though and earnings is also that a lot of times the companies will try to manipulate the earnings too. So they'll tell like the analyst will look at everything and that's how they come up with the earnings. But they'll tell the analyst that, hey, our earnings for this quarter or whatever, it's not what you have forecasted it to be. So what the analysts will do is they'll modify it to a lower earnings forecast, and then when the actual earnings come out and it beat the the forecasted one, you'll start to see a lot more push up or a pump up in the prices. Actually, Tesla has done that a lot too, and so has Apple. If you want to look into those specifically, these companies, like a lot of the major companies, do it generally, but these companies for sure have done it.
Yeah, I know my company does the same. They do the wonderful reports. And I work inside.
You want to be careful when you
Okay.
say this on YouTube, Jen. You don't want to get caught up.
No, nobody knows where I work.
There you go. Perfect.
Love it. Love it.
Thank you.
Yeah, for sure.
Uh,
I was trying to help you out. Alright, so same thing. You got another lower high being formed here. Another resistance. Come on here. Come on to the hourly time frame. I thought it was a little bit cleaner on the 30-minute, but we'll do the hourly here. Same thing. And now can we continue pushing? So all the data so far hasn't been too far off from the forecast, which is a good thing. You don't want a huge gap in the forecast and actual. I'm gonna skip through here. Alright, top wick pushes back down. Notice how we end up creating a new low compared to the previous. Same thing, I'm still gonna wait for a retest before an entry. So we still do have some time here. You guys are okay with me skipping through?
yep.
Alright. A lower high being formed right there. Is this the new 4 hour? This is the new 4 hour right here. So this is the last 4 hours of a Friday candle. This is US 30.
See some volatility.
Yep.
Okay, it's me again. I have another question.
Yes.
It's about the spread.
Yep.
I was looking at the spread for US 30 and gold, and I realized for US 30, and for me, will be different in each session.
Yes. That's how every pair is, yeah.
Oh, okay.
Yeah.
And the most expensive is Asian session.
Yep.
Is $397.
Yeah.
So in order to make a profit, I will have a very good setup.
Yeah.
So no trade for me, not even London.
Sometimes I'll see like a better movement when like London opens up, but usually it's like in New York. I would not suggest trading US 30 in Asian.
You know, no. So I'm studying US 30. I wanna learn very well. Gold, and then I will move to US 30.
Yes.
Maybe
Perfect.
next year.
Yeah. That's perfect.
Perfect step up.
So we're coming right back down. Finally, we're getting some candle closes. We got a retest right here. And then pushing back down. What I essentially want to see is break of all of this right here. If there is. But again, it's a Friday, so you want to be careful. I would not be going in with like a 1% risk. I'll probably go in, or like a 2% risk. I would probably go in with a 1% or like 0.5%. Woo, there we go. It's fun watching these movements.
I was about to say, is it the final 2 hours?
Yeah.
Yeah.
I only see a pullback though. I'm not taking an entry all the way down here.
If Andy was here, he'd be taking some entries for sure.
I love trading with Andy. Like every time there's big movements, it feels like a Super Bowl or something.
For real.
200 points.
It's hype.
Yeah.
Love it.
What time is it now?
It's the last hour of New York.
I see it now.
Yeah.
Forgot.
It would be a no trade week for me too. Unless like price kind of fluctuated back here instead of just like fluctuating and then just a push back down. This would be like a ideal stop loss right up top here since we have already respected this area as resistance and price is pushing down. But I would not looking. Go ahead.
Oh, go ahead. Can we see that time frame that showed the other those longer wicks though?
Here?
Break it. Yeah.
Yeah, it would be a no trade week for me.
Yeah, at this time I wouldn't probably be looking at charts.
You're in the last hour and price pushes right back up and now happy weekend pretty much at this point. It's fun though because that's exactly how like we saw the details of the price action of price just pushing back down into these areas. But if it was like somewhere around here, I would have taken the entry. But yes.
The same area where we wanted the entry, right?
Mm-hmm.
It was if you take the entry right here, could be practically the same that we took here. The same area.
If price continued, just pushing through. It's waiting for the confirmation though for like a tighter stop loss, right? Versus somewhere here where you have the wick rejections. So we already had that confirmation of price pushing, right? And then after that, as it came back into this area, all it did was just end up creating lower highs and lower lows, even though it looked like a messy price action here. But that was pretty much it. So even though, we didn't take a lot of trades today, and we closed out with like a 0.84 negative equity, you could see like compared to like the other trades that we do end up taking and the risk management and all of that, this is very small. Right? We have seen like insane percentage increases on US 30. But even if we didn't take trades, I hope like, you guys were able to get some information, a little bit more detail about the price action details, the candle anatomies, the structures, what to expect when price taps into all-time highs or like weekly resistance and support areas. Because this is all the stuff that you need to prepare for going into next week. Not even the fundamental side, right? The fundamentals here, like they were also pretty fun. But just from a technical analysis perspective, the way that market was setting up this entire week and the way that I closed out, even today, it's very important to watch out, what price is doing at these key areas and making sure that, you're able to figure out what are trade days and no trade days and waiting for your confirmations before you look for an entry instead of just looking for impulsive moves. But other than that, does anyone have any questions here on Zoom or even on YouTube?
No questions for me.
Everything made sense today?
Oh, I have a question.
Yes.
What would you have considered, let's say, if we had marked this level up right here, and done instead of this box, had the box lifted higher, and so that would have made this kind of more of the break and retest.
Mm-hmm. Would I have considered this then?
Yeah.
I still would have taken the entry as price broke the low here. With those confirmations, I probably would not consider this a break and retest because even if the box was like, let's say right here, the fact that we're still holding onto a support in these previous candles. Mm-hmm. And so can we continue breaking, below all this little support here?
Right. I'm just trying to see, like, how could this move have been? And then my thing would have been, I really at this point wouldn't know. I would have used the wick, that previous wick, as the TP.
Right here?
I know that the one from way back,
This one?
but it broke it.
Yeah. But
Oh,
that's fine
no.
because as soon as it broke it, that's really when you start to see like that volatility and like indecision in the market kicking in.
Right.
I mean, we did
Yeah.
come back. You know, the market is always going to be moving, even if it's not ideal trading conditions for us specifically. But price is still going to be moving. It's still going to come back and respect into, you know, higher time frame levels. So price did still come back and respect this break and retest once we did start to see, you know, this volume right here. But that's still, you know, okay, because we didn't have to be part of this move here
Right.
specifically. There would be much better moves.
And then I have a quick question, because remember, I haven't looked at EU
Yeah.
in a couple of days, but when it was hitting parity, right?
Mm-hmm.
And we were still looking at US 30 and the whole. Do you have any thoughts on, like, you're taking trades and both pairs are heavily influenced by US news? How would do you consider like the amount that you're trading in each pair, or do you pick the one with the best setup? Or
I would pick the one with the best setup, but if I see that one pair, if both are moving, you know, I would start looking at which one is a little bit less volatile. Like, I don't want to be looking for a trade on the pair where the candles are breaking highs and lows, but there's still, like, you know, good volume. Because very easily price could just, you know, push right back down into the opposite direction and take you out. So I would want to see the volume, but I also want to make sure that there's not like crazy volatility and that there's proper setups.
got it. So like position, volatility, and then the entry.
Yes.
Okay, that makes sense.
Always like try to pay more attention to like the structure. So like in this case, for example, like there's, you know, massive wick projections into these areas, but we're still following this bear structure. So now I've figured out what the structure is. Now the next thing for me would be to figure out like what is an ideal entry. So before you even get into a trade, you want to think about like your potential exit strategies. One is TP hit, second is like partial with a trail stop loss hit, and then the third is a break even hit. You never want to think about like worst case scenario is your stop loss hit, but obviously like you want to keep it to a point where the way that I at least think about it is, let's say even if I were to take an entry here, right, and my stop loss would be here, then I want to take the entry with so much confidence that my worst case scenario is hitting a break even, not hitting, you know, a loss, a stop loss.
Right. That makes sense.
I'd pick that up from like the venture capitalist that I used to help out. It was a guy like in DC, and like he asked me like some questions. He was like, "What's the worst case scenario when you're looking at angel investments or venture capitalist?" And I told him, I was like, "Worst case is like, you know, you probably hit break even," and he gave me like the most pissed off look. He was like, "No, like the worst case is probably a 1-to-1. That's it. Like I'd put in like, you know, 500,000 and I get 500,000 extra, right? Because usually VCs try to go for like 20 to like 30 times their investments. So for me, like I just tweaked that up for like Forex, and I was like, it makes sense. Like worst case for me would be a break even. Like I don't want to go into a loss.
Right. Yeah, because I noticed I guess the phrase is like over leveraged on dollar news.
Mm-hmm.
And I was like, oh, might not want to do that.
Yeah, this risk management, like when you really start to hone in on that, it works like across the board, regardless of whatever investments that you try to get into.
Oh, I guess that's what you would call it. It's just another form of not trading too many pairs that are influenced by similar news.
Yeah, you definitely don't want to do that. All right, there is another question on the consideration that the gentleman is asking. I'm assuming he's talking about you, Ian. There's no wick to the top and indeed broke the lows. Would that maybe be a confirmation since there is no wick on the top for you to sell, and stop loss on the candle high, which would be a tight stop loss that closed bullish, almost doji? Are you talking about this one? If it's this one, then yeah, like, you know, price obviously giving us the massive bearish volume with no top wick and price pushing down, and then the stop loss being up top here. It is pretty tight, but the fact that we've already established a resistance here, and the following candle gave you a top wick rejection right into that level, pushed back down and closed here, and the next one took you right back down. So it is pretty tight. You could either place it here, but the furthest that I would place it would be right at this green line here, where if price were to break above this, then obviously we're going right back into consolidation. That's not something that I want to be a part of. So I think the furthest that I would place it would be like right up top here. Alright, so I will see you guys on YouTube for the webinar tomorrow. But other than that, enjoy your weekend, guys. And on YouTube, we'll see you guys for the weekly outlook. Have a great one, everyone.